All right, up next here, we have Diane King Hall, host of Morning Movers, taking a look at names on the move. We'll start with Lyft, which got an upgrade this morning. Big news on Lyft.
Yeah, I know. Shares of Lyft lifting off this morning, Nicole. Shares right now 5% higher. This off the back of an upgrade from TD Cowen. They are moving from the sidelines to a buy rating. They had a hold rating previously. They've raised their price target to 21, and now if we compare that to where Lyft was yesterday, that implies about 40% upside from Monday's closing price. They've named Lyft their top Smidcap idea for 2025. If anyone doesn't know what that means, small mid-cap, basically. So Smidcap is the word there. Execution is the key word here. This is what the analyst sees when it comes to Lyft. They like their new management team's execution when it comes to the customer's experience. They talked about the features like price lock that lets riders lock in, essentially consistent fares on their typical routes. The stock's gaining some momentum. As you know, Nicole, has been outperforming the S&P 500 year to date. And even over the past 3 months has been outperforming the S&P 500. So you are seeing, the share price. And you compare it to Uber. Uber's also outperforming. Uber's the greater outperformer there, but you can't sneeze at the numbers that you're seeing from Lyft today. The other thing that TD Cowen likes, the markets that they're leaning into, they think that it bodes well for Lyft. They're pushing to tier 2 cities like Charlotte, like Indianapolis, along with also, if we're looking abroad, its acquisition of the European taxi app FreeNow. They think that'll drive new growth, so they see that as a key driver as well. And then they talked about the partnerships with DoorDash. Again, they see that as a tailwind and just overall innovations with regard to Lyft. And also, don't sleep on autonomous. Lyft has been leaning into that as well. They had that vehicle rollout with May Mobility in Atlanta. Next year, they're doing that in Dallas through Mobileye. So they're leaning into that as well. And they see that, again, as a long-term growth driver and just overall game changer when it comes to, say, these ride-share companies, Nicole. So Lyft right now shares higher.
That was Uber's gig. I mean, Uber was going to be doing a lot of that autonomous, full self-driving, robo-taxi type of thing. And then they took a step away from that. It's funny that Lyft is now stepping in. But, the in quotes, customer obsession. I don't know. Is there really customer obsession for Lyft? All right, I believe it. I like that they're spending for a better experience for the drivers and the customers.
Yeah, I do. I think, part of it too is, look, you really only have two options when it comes to the rideshare services. And the younger generation they're not driving as early as older generations, include myself in that generation as well, because they have more options like the ride-share service. So again, that's another tailwind. That's not what this analyst speaks of, but that's another tailwind when you think of the ride-share companies, because the way younger people are looking at mobility in general, they have more optionality than getting their license and driving themselves.
Yeah, without a doubt. Let's talk about Mastercard announcing the latest stablecoin deal. That's big news.
Yeah, and this is kind of, I wouldn't call this strange bedfellows, but teaming up, I'm going to use the term that Jenny used earlier, maybe two is better than one, essentially. Mastercard swiping right on crypto. They're deepening their partnership with Fiserv, rolling out that new digital dollar called FIUSD. It's a stablecoin that will be plugged into Mastercard's global payments network. In other words, it just brings crypto closer to the checkout line. You have both shares of Mastercard and shares of Fiserv rising on the news. You also know that Fiserv had launched that new digital asset platform. So we know that stablecoin is just gaining more momentum with Fiserv. They're teaming up with PayPal, Circle as well to power those stablecoin payments. And Nicole, you know that Circle IPO was a big deal down here. Huge. And those shares surging. Huge this year. So the timing of this obviously comes with some regulatory wind at the back for their industry. You had the Senate giving stablecoins that green light via the Genius Act. Just really give stablecoin more solid ground. I wanted to say more stable ground, but again, I don't need to do all the puns. Again, you're seeing shares of Fiserv and Mastercard higher. And also want to note with Mastercard, you have Wells Fargo saying, look, when it comes to Mastercard and Visa, you'd seen a little sell-off, a knock on those recently because of all this news around stablecoin, but that firm's seeing upside for both of those and says, look, the fears about stablecoin as it relates to kind of these traditional payment networks are overblown. They won't completely disrupt traditional payment. And there's just too many roadblocks for Wells Fargo's point of view for stablecoin to truly replace the traditional card networks anytime soon.
Yeah, and Visa and Mastercard had to get in the game here because you had the Senate pass that bill, the stablecoin regulation bill last week, and we saw, as you mentioned, Circle, Coinbase, the crypto names were surging, and Visa and Mastercard actually were pulling back. In fact, they are on track for their worst monthly performance in a couple of years for Mastercard and Visa. So this is obviously a transition and an evolution, evolvement to get into this game here. So, and KB Homes, we have a move here after the earnings. Let's get to that.
Yeah, look, let's catch people up on their latest quarterly results in terms of how KB Home did. On their trailing quarter, they did better than expected. EPS coming in at $1.50. Revenue coming in at $1.53 billion. So they beat on the top and bottom line, but they have cut their outlook again. So that's the challenge. They slashed their full year revenue forecast for the second time this year. They're now guiding for between 6.3 to 6.5 billion for fiscal 2025. That's down from what they originally guided for between 7 to 7.5 billion. They had guided for that back in January. There's just overall sluggish patterns happening within the housing market. The conditions are still not great there. You still got the high mortgage rates that people are dealing with, high home prices. So it's just a multitude of factors that's just holding the housing market back and keeping buyers on the sidelines. We have seen, obviously some buying activity because that's how they beat in their most recent quarter. But a lot of these home builders are having to do incentives to, whet the appetite of buyers. Their price guidance, they also trimmed that. They lowered the top end of their average selling price forecast. They're expecting that to come in between 480 to 490,000, and that's compared to what their prior range was. Their prior range, they topped out at nearly 500, nearly 500,000. 495 was their prior range. So again, it just shows that there is still broad weakness when it comes to the housing market, Nicole.
Yeah, and the guest I had on yesterday, that was the name he liked the least in the group. He did like D.R. Horton and Meritage. He had Pulte in there. He liked Pulte too, more than KB Home, but less than D.R. Horton. That was David Triner from New Constructs. He had buy ratings on those two, but less hot on KB Homes, concerned about the revenue, the margins, the profits, and slower activity.
It's been a difficult space, and look, D.R. Horton, it's still underperforming the S&P 500, but outperforming KB Home.
Thank you, Diane King Hall.